All right. Good morning, everybody. Welcome to Loan Officer Breakfast Club. It is Thursday, February 19, 2026. Racing through the year as always. Glad to have you guys here. Owen Lee with his USA. I assume that's some sort of a hockey jersey or something.
Jersey.
Like
this is the week.
This is the week. Oh, I have not been paying attention to the Olympics at all. I don't know why.
Are the Olympics going?
This is all you need to know, Frank.
That's all I need to know? All right. Good enough. All right. We're going to have a great day.
I've been watching the curling on the Olympics.
Really? That's the rock that they slide?
Dude, I love watching that for some strange, odd, peculiar reason.
There's something satisfying about that stone gliding across the ice, isn't there?
I don't know. It's impressive what those little broom sweepers, that little bit of lack of friction. That's what it does. Is when they sweep the broom, it melts the ice right at that
just
little
a little
spot.
bit.
And it makes it a little bit faster where they do it because you're removing friction. I don't know. Maybe it's something about that in our business, removing friction, getting people to work with. I don't know. Just something about it.
Carl, curling is what makes me believe I could still make the Olympics.
Yeah, right. So true. Yeah, I could do that.
I could do that.
You're saying
there's hope for me yet.
Yeah.
Somebody was saying we need to have like a normal human being try that event before we have the Olympians come on, just so we can see how big the gap is.
Oh, I bet it.
I volunteer.
Yeah.
The perspective.
Well, shuffleboard. You ever played shuffleboard, Frank?
Is that the one in the bar? They got the big wooden board with all the stuff on it.
No, see everything goes right. Is that the one at the bar? No.
Well, what is that one at the bar?
Outside the bar.
They got the weighted.
No,
I know shuffleboards with the stick, huh?
Yeah, it's with the stick and the little clay pigeons that people like you shoot at when you put them in the air. Normal folks play shuffleboard with them.
Yeah.
It's actually a fun game. So
it's shuffleboard also in the bars. See,
no, it is. It's just another.
Oh, okay.
Yeah, it's table shuffleboard versus it's versus sober people shuffleboard.
Yeah. Hilarious. Good stuff, man. All right. Well, golly, we got Owen Lee in the house today. That'll be fun. I'm looking forward to hearing what he's got to say. There's always something.
What jersey?
Good that
so you're holding up
the
USA. What is that? Is that hockey?
Yes, hockey.
Okay. Is there a big game?
Any hockey fans amongst the 250?
Let's see it. Come on. Show it to us.
Yesterday was our day.
Are they playing today? Is that what it is?
Well, both the United States and Canada won yesterday in overtime, and two of the most thrilling games. I couldn't watch either of them in full because of the time they were on, but managed to tune in for the last 5 minutes in overtime.
Wow. So are they playing each other? Like, where are we at the beginning, or kind of?
Would that happen?
Yeah. So they're each in a separate semifinal. So if they each win tomorrow, then they will play on Sunday for the gold medal.
Wow.
The women are playing today. The U.S. women are playing today in the semis, I think.
This is for the gold medal. The women are
gold medal
today
for the U.S. women.
Canada also.
Wow. Oh, so that's when the gloves come off, Mr. Chris Johnstone. That's when we've all been friends.
Woodland is on this morning, but I wore this.
Yeah. We've all been friends. We've all been buddies.
Yeah.
However,
not for the next 72 hours.
All right, let's get rolling here, guys. All right, Angela, you got your hand up real quick. What you got? We gotta move on. You got something awesome? Yeah.
I was just gonna say I'm a hockey fan. In fact, I'm driving to Wyoming to watch my grandson play in a hockey tournament. I've got my mom and dad with me, and we are traveling. Mm-hmm. So I am hockey all about it. I love USA hockey. I love it all.
Nice. Cool. Good stuff. All right. Hey, before we get going, Gen Z, what's happening at Animals today?
So today on The Complete Loan Officer at 2 o'clock Eastern, Mr. Carl White is going to walk us through the title company refinance strategy.
Ooh. Oh, that's a good one.
Which falls right into place with what Owen's going to talk about today. I sneak previewed some of the slides. It's like we talked or something, even though we didn't. So it's perfect for it.
That's such a cool strategy. Yeah, because we've been kind of kicking that around.
So easy.
It's so easy, huh? Yeah. If you wanted a layup, come to this one. Come to this. What is it? The Complete Loan Officer today?
Complete Loan Officer, 2 o'clock Eastern. Yep.
2 o'clock.
Okay, 2 Eastern. Go into the website. If you remember, go to the website, classes, Complete Loan Officer.
It's a massive source. Just FYI, it's a massive source of refis, like really, really big, and literally costs zero. Like there's nothing. Like it's really, really good.
That's
Like Rudy put in the chat. He saw somewhere like 57% of all loans done last month were refinances.
Yeah.
There's a lot of refi going on out there.
It might get more after you see Owen slides today.
Oh, wow. Cool. All right. Good stuff. Today at 2 p.m., Complete Loan Officer, Mortgage Marketing Animals. Kelly Dutton's in the house. Kelly Dutton, tell us something good, man. What you got going on?
I've got a lot of good stuff. Today's payday for a few people with...
Woo!
I know. And I just
Paydays are good.
Payday's coming up, and then we have a bunch. I haven't mentioned it, and I've kept it in the hopper. We have 8 to 10 SBA loans that are all in the hopper coming at appraisal level, which is once SBA gets to that appraisal level, then now you know that
things are moving.
SBA is in moving.
Things are moving at that point.
They were closed.
Nice.
We had some shutdowns, so there was a little bumps there, but SBA is on. They're a long loan, and thank you everybody who dedicated themselves to the paperwork.
Well, there you go. Great stuff. And if you want to work with Kelly Dutton on SBA, commercial, the oddball stuff that you don't normally do, but you still like to hand it off to someone and get paid, just reach out to Kelly Dutton. Kelly, you can put your email in the old chatteroo there so people can email you, or you could always go to workwithoneclick.com. Work with one click. Gen Z. She's so good. She already put it in there, Carl. Workwithoneclick.com is where you can go. All right. So with that, let's go ahead, and I think we'll go ahead and move over to, the big guy, the big dog himself, Mr. Owen Lee of the Mortgage Market Update. What's happening, man?
Good morning. Great day. Great day today. Great time to be in the housing industry. I know we were talking about the hockey games yesterday. I couldn't really watch them because I was doing something that was pretty cool yesterday on behalf of the NBA. I don't mean to be secretive or anything, but I haven't quite got clearance to talk about it yet. So I promise I will talk about it probably next week. And if anyone wants a sneak peek, follow me on LinkedIn because I'm going to post about it as soon as I get a chance to. So just go to joinowen.com if you want to follow me on LinkedIn. Pretty cool day yesterday. So go to joinowen.com if you want to see it. But today is a great time to be in the housing industry. Jen, if you want to throw those up. We talked about this before, and Carl, your going over the refi strategy is literally perfectly timed.
Yeah.
We've talked about this before. You got to keep the marketing going. If you look over the last 3 weeks, we are now pretty well at the best rates of the year, the best rates of the last 3.5 years. I think it was on 2 weeks ago, and I said we were about, 50 bips off. Well, you can see this chart from the low to the high. We've gotten at 1.52 bips back, and so this is, we're in good shape right now. Yeah. You can see the last Fed meeting came out. We didn't get any kind of increase. I still don't think we're going to get one at the next Fed meeting. We had some rough looking jobs data, and rough means, this is where we're at right now, 130,000 jobs, which is relatively tame, a relatively tame reading, but they were expecting 50. And of course, we're going to get a big revision, which is frustrating, but that, kept rates low for a little bit. And then there were some negative retail sales number. There were some more job openings, some strong layoff data, and the market just kind of went with it and has drifted up quite a bit and has not given it up. That little thing down, that's 6 bips. So on a chart like this. So we're in a really, really good spot right now. I expect, unless we get some data point that is contrary to what the market's expecting, we're going to kind of ride in this area right here. and it is doing some good things for our application numbers. Jen, if you want to go to the next slide.
If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time.
We'll just click that over. So this is a slide, you can see applications and rates, right? So the orange or yellowish orange single line is interest rates. This is about a 2-year slide. And the gray area is application numbers. And so you can see, when rates go down, there's an almost immediate inverse, spike in rates or in applications. And I think that's refis. And really, I don't know how long this is going to last, but I'm moderately fascinated by it. Everybody became so interest rate focused in 2020 and 2021 that when we even have the slightest dip down, if we get to like 6 1/8 or we get near 6, the application numbers just go. If we ever got to like 5.875 or something like that, I think we'd get on fire with applications. So this is really something that I would, again, lots of white space on here. Put your information on it, send it out. I had breakfast last year with Bill Banfield, who used to run Rocket Mortgage. That's kind of one of the cool parts of the MBA gig. I get to meet and hang out with a lot of really smart, really cool people and just try and, osmosis in the information if I can. And, he said they see it immediately as soon as they go down or if they quote below 6. And he said, we quote below 6 regularly with points, with 1.5, 2 points. And their average loan amount size just skyrockets because the more financially minded people are paying attention and just drastically coming in the market. So this is something that I would share going forward. Jen, if you want to go to the next slide. So let's take a look at a couple of things. This is Fannie Mae's housing forecast that just came out about 5 days ago. Look at the percentage in Q1 of refinances, 45%. Now, I know I am a purchase-focused person. I have been my entire career. Historically, our company usually rides about 80% purchase and about 20% refi. But, with the cash outs, with the rate and terms of the lowest rates in the last 3.5 years, you're really missing a few apples that are easy to pick if you're not doing Carl's strategy. I mean, I know this is the Freedom Club and we have acts of freedom and whatnot, but if you can put in a little bit of time on the refi program, that'll give you a whole lot of freedom in the form of additional commission checks. This 75%, I mean, look where we were in the first 3 quarters of last year, right? We're at 25% to 45%. And look at the difference in overall volume numbers. Roughly 125 million higher in volume. That means we're riding 25% more in volume. You got to be sure than we were last first quarter. You got to be sure you're picking some of that up. So Carl, impeccable timing on doing the refi class.
Yeah.
Let's go to the next slide, please. All right. And so you can see housing demand. It's not just refinances, right? I don't want this to be totally refi focused, but housing demand and new listing rebounded. We had the polar vortex. I mean, we're riding at about 40 degrees this week in Metro Detroit. I think a week ago it hit 35. It was the first time we'd been above freezing in like 9 weeks or something like that. So, people just don't go, even in Michigan, they don't go out to shop for homes when it's 19 degrees outside, typically. Yeah, so you see the houses go on the market going up. You see the demand going up right as interest rates are coming down near 6% or at 6%. The effect, as soon as it kind of makes it into that public consciousness, is almost immediate. Again, this is a great slide to share. For those of you that are on Housing Wire, I would go print the full article and have it. Let's go to the next slide. So this is very important also, okay? Because we saw refis 45% of the market. We are still at, if you look at the purchase application index, we are still running probably 10 to 20%, as many in some markets as 25% higher in the purchases as well. So not only are the refis going up, but the data, when interest rates get towards 6%, the purchases really pick up as well. And so we're riding higher in purchases. We're riding higher in refinances. For those of you that are doing your prospective marketing and prospecting, now is the time, your cup should be full. So congrats. Again, lots of open space on this slide. Put your information on it, send it out to your realtors, send it out to your pre-approved and looking. That is something you're going to want to do. I think we have just one or two more slides. Jen, if you want to move to the next. Single family inventory. This is also close. We've talked about this before. Best rates in the last 3.5 years. 2026, still riding higher. We're close to almost 700,000. That's about 10% higher than we were last year at this time, about 30% higher than we were 2 years ago, right? Lower interest rates, more homes on the market. I know it's a bummer and it's weird to say that home deflation or, property value decreasing is good for loan officers. If you're in the Southeast, Florida, we talk about a lot, Texas, and some of the West Coast areas that were white hot. Yes, values are dipping a little bit, but it should be bringing buyers back into the market. Housing affordability, it's at its best place in 3.5 years. I mean, what are people waiting? The best place in a decade? I don't know when that's going to happen. So just something to talk about. I would absolutely use this one as well. Slap your information in the upper right-hand corner. Position yourself as the expert in your community. So let's see. I think that's it, or maybe we have one more, Jen?
Just this one. Yep.
Okay. Yes. So this is something that's very, very hot topic in Washington, D.C. right now is what are they going to do about affordability? And, right now, there's not a whole lot of things in there that are immediately going to help loan officers. They want to roll back regulation on new construction. That's great. Doesn't really provide a lot of immediate relief. They want to limit institutional home buyers. There's a lot of conversation in Washington about what is the definition of that, right? If a giant equity, Goldman Sachs goes out and buys 1,000 houses, that's easy to identify. But what about a regular real estate investor? Are you allowed to own 10 properties? Are you allowed to own 15? Is it the fact that you incorporated and didn't put them in your own name? So unless the firms that own the houses right now are incented to immediately start to sell those houses, I don't know how much of an effect that's going to have. One thing there's been conversation on that would really help is responsible look at the FHA insurance cost. There's talk about bringing that down. That would have an immediate effect. And of course, talk about lowering to a more sensible rolling back of LLPAs for conventional loans, that would have an immediate effect. So these are things that we should be talking about, hoping for. A lot of conversation in Washington, D.C. about whether or not housing is going to get a few lines in the president's State of the Union address. So we'll see. So anyway, but we, I don't want to say we don't need bold strokes, because I love the bold strokes. I would love it if they halved LLPAs and whatnot. And that's great. But don't wait around for that. The market, this is the best market we've been in 3.5 years right now. So let's go out there and get it right now, because it's out there for us.
Hey, Owen, how
Yes,
involved is MBA in those conversations about making housing affordable? Do they involve you guys? Okay.
Yeah.
Okay.
At some of the highest levels.
Okay. All right.
So,
Yeah, that's good to know. Because the things that you're saying are great. The price adjustments and things like that. Are they hearing that? And so I know if you guys are involved, they are, right?
Next week, Frank. Next week.
Okay.
So,
all right.
Yeah. So anyway, but yeah, it's good stuff out there right now.
Yeah. No, it's awesome. Great, man.
Yeah. Oh, and you know how we do these Call Stars Blitz things where we get on the phone collectively on a Zoom like this, and we all sit and, we have this, hey, here's who we're calling this week, and here's the script. So, dude, get this. So, Eric Morgan was on the Call Stars Blitz here last week. He got, it's again, this refi thing keeps coming up. He got 4 refis. This is just on one day of phone calls.
Yep.
He got 4 refis from the Blitz, 3 contracts in last week and 1 more coming. And he was saying, hey, I haven't had this much business in a long time.
That's amazing. I mean, just think about that, right? If let's just say your average loan amounts, I think the conventional loan average is 400,000 right now. Let's say you're 400,000, you make 125 basis points, $5,000, you get how often do you make $20,000 in one afternoon?
In a day.
The funny thing,
20 grand.
I thought about that, and I saw it's just a remarkable story. And there's literally dozens of those type of stories from the Blitz.
I mean, guys,
and
gals, a brain surgeon doesn't make 20 grand in a day.
Right.
No. And I started thinking about that. The average loan officer closes 0.8 loans a month, right? That's the latest stat that I saw. So in one day getting 4 deals, that's equal to about 5 months of work. I'm using air quotes here. Of the average loan officer, he got the results in one day what the average loan officer across the nation got in 4 or 5 months.
Wow.
And,
crazy.
If you just think for a minute about how many professions there are out there where people go out and have an awesome day, right? Police officers, firefighters, teachers, nurses, doctors, accountants, whatever, right? Pipe fitters, HVAC people. They go out and have an awesome day, but they make the same amount of money every day. You go out and have an awesome day, you make 15 grand. Right?
Yeah, it's a parade.
I mean,
yeah.
Let's do it. Let's do it.
Yeah.
All of us.
Right. Hey, Brad, I see you got your hand up before we go. Hey, Chris Johnstone, tomorrow, what do we got?
So we're going to be talking about, there's a lot of news coming out in AI about Claude. There's just a ton of news coming out. So we're going to talk about the 3 major announcements that happened in AI with all these different networks and why ChatGPT is still where you need to be. And Owen and Carl, what I'm going to try and do is sneak a little refi calculator in there so we can create a custom GPT that will help people talk about refis, and then people can just slide that into the emails and just start more conversations with people about refis.
Of course, you're going to do that. Of course,
yeah. Of course you are.
I was thinking about doing that very same thing, but
we're going to get to that. Yeah,
Carl, I'm now free from 10 to 10:30 because if Chris is going to do it, I don't have to do it.
Yeah, I thought I'll put that on pause for now. So.
All right, so that'll be tomorrow on Breakfast Club. Chris Johnstone will be here, and then Brad, you got your hand up. What you got? Something for Owen?
Yeah, Owen. You mentioned just a little bit earlier about Goldman Sachs buying a bunch of homes. So I know that there are some, big investment firms that are doing that. Can you talk about the impact of that? Is it designed to hurt inventory? How should we be looking at that?
Well, first of all, my good friend Carl taught me this phrase, the rectal extraction method. So when I said Goldman, that was the rectal extraction method. I don't follow which equity firms are buying how many houses. So I want to be very clear about that.
I'm not saying whichever firm. I'm
the
speaking
concept,
in general.
right?
Yeah, conceptually they do it to hold on to them.
I think BlackRock or Blackstone is doing it, but
yeah, conventionally they do it to hold on to them. They do it because it's a good investment. And
then they're hoping that the value of the home is going to go up.
Yeah, and they're making
So plus you're making great revenue along the way. Yeah,
equity money, and they only pay 20% tax on it. So
yeah,
they do it for the same reason everybody else does it: diversification, profit.
Yeah, just at a bigger scale.
That's right.
Okay, 2 more questions here before we get out of here for Owen. Christopher, what do you got?
Owen, recently on LinkedIn, there's been a couple blurbs on the regulators taking off the guardrails and quotations for banks to compete against IMBs. What do you know about that?
So there's this confusing regulation. I don't want to get too deep into it because it's really, really nerdy, called Basel III. And Basel III is a bank capital regulation. And Basel III regulation is about what portion of the bank's capital, right? Not deposits, but what the bank is worth, has to act as a safety counterweight to counteract risk that they take when they lend money. And some of those regulations that were in Basel III, which is largely a European regulation framework where they don't even have a 30-year mortgage, are getting rolled back. And they think if they roll it back, then that might bring more banks into the mortgage business. I'm not really sold on that. No disrespect if there are any bank folks on the call this morning. Typically, banks aren't as entrepreneurial as a lot of us. So even if banks make a move to get back into the business, they exited the space largely 15 to 20 years ago. Those muscles are atrophied. It's going to take a while. So there might be some smaller community banks that come back in and whatnot, but and Basel III is still a long way from, it's got to be reformed, comment period. It's 18 months away. It's nothing I would worry about right away.
Okay.
If at all.
Awesome. Sharon, what do you got?
Sharon, good morning.
Good morning, Owen. How are you?
I'm excellent.
You mentioned LLPAs and then FHA, I guess MIP, lowering things, making it more affordable. How, I understand the LLPAs, but what's might be on the horizon for FHA? Because I see the split with the MIP making you more affordable.
Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com.
So the MIP, so everybody understand, just think for a second what FHA really is. FHA is a giant insurance policy. It's mortgage insurance. That's all it is. Once a year, the government has to go out and do an audit on the pool. They need at least 2% of reserves of what their risk is. The last one came in at 11%. So the fund is, by a lot of measures, overfunded. So when they do that, a lot of times they drop the cost of the insurance to stop over collecting, if you will. There's a concern, though, because the run up in that insurance pool came at a time when there were really, really lax foreclosure rules. You could basically go online, claim hardship from COVID. The Biden administration, not being political, but the Biden administration didn't enforce the rules. You could get 3, 4, 5, 6, 7 loan modifications. Mm-hmm. No lie, under the old rules. Well, the Trump administration rolled those back. They said, we've got to get back to it. There's got to be a consequence if you don't make your mortgage payment. If you don't, it's same with student loans. If you don't have a consequence to not making the payment and borrowing the money, the whole system breaks down, right? Mm-hmm. So foreclosures are starting to tick up. And FHA's worried. Yes, we got a lot of extra money because that was in a period of time where almost nobody got foreclosed upon. So how real is that overfunding? I think we might see, a cut, a temporary cut, 20 bips, something like that on FHA. I don't think it will be as meaningful as what we might see if LLPAs get reduced on the conventional side, but everything helps. Everything helps.
So you think the rates will become more affordable? Not that they'll, reducing the upfront MIP isn't going to really do anything, but reducing the monthly would. But you think it'll be the rates?
I think it's likely to be the rates, but we don't know, because the rate thing is better for the politicians, right? Mm. Cost, hey, yesterday, average FHA loan is $250,000, rectal extraction method. I don't know exactly what the average FHA loan is. We lowered this upfront cost by 20 bips. We just put $500 in your pocket. That's easy for people to understand. Politicians love that kind of stuff. So I think we're more likely to see it there, but I'm not sure. There are some people inside. I had a panel at the servicing conference in Dallas on Monday with the FHA commissioner, and I asked him straight out, Frank Cassidy, FHA commissioner, on a panel. He was 3 feet from me, and I said, Commissioner Cassidy, are we going to get an MIP? And he danced around. It's a political appointed position. But basically what he said, they're rightly concerned about, how much do we have to hold back for the foreclosures? So I think we'll see something. I think it will be temporary. I don't know if it'll be a gigantic needle mover, but hey, every little bit helps.
Thanks.
Yep.
Good. Great. Thanks, Sharon. Awesome stuff. Well, hey guys, we are going on our email that we send out today. There'll be a link to download Owen's slides, but Gen Z has put the slides in the chat right now. If you want to go to the chat sheet, they're there. You can just grab them and download them right now from the chat. So if you want to grab them now and you're able to access the chat, they're there for you. We will also put a download link on today's email blast that goes out right after the show. If you're not seeing our emails that come out, check your spam. We might be going there. Where do they come from? LOBC, right? I don't know. Just if you're not seeing it from us, look in your spam, you'll find us. We should be there. But the slides are there in the chat right now. If you want to grab them, download them, just click on it and download, and we'll go from there. So with that, we'll wait around a little bit and just let you do that while people are downloading. But for now, Owen Lee, thank you, brother. Man, you're so great. We really appreciate you, as always.
Thank you.
We are so blessed and lucky to have you. I always say that every single day, every single time you're here, but we mean it. We really, really do. Mary, what do you got? Mary?
Okay, yep, sorry, I had to get off. Real quick, on the MBA slides from a couple of weeks ago, one of them had shown, Owen was talking about it's not a talking head. It's the experts that are predicting the rise in the rates. What extra data do we have to share why is the MBA predicting after this, it looked like on that flat line, the rising rates over the next 3 years? What's driving that in general?
The amount of money that the federal government has to borrow. So if you just think about the bond market for a second, we're running a lot of debt right now. And the debt projections, we always run a lot of debt. And there's a lot of professional economists that believe so when you sell a lot of debt, right? When the United States government sells a lot of bonds, they force feed them to certain buyers. They can make them buy them, right? And so the more they force down their throats, the less mortgage-backed securities they want to buy. And so it's just a supply and demand thing. So if I'm buying less mortgage-backed securities, then I need the mortgage-backed securities to bear a higher interest rate in order for me to want to buy more of them. So Mary, it's not complicated at all. If we ever want to see interest rates in the 4s or the 5s, absent some cataclysmic recession or something like that, the United States federal government has got to go on a diet, in a big one. And that's not a political statement. You can have your own beliefs about how much money the government spends, but we spend more than we take in.
Wait,
and
what?
That only lasts so long.
Wait, what was that? We what?
Yeah.
What? When did this start?
I know. But Mary, it's simply supply and demand. So when they look at how much treasuries they're going to have to sell, they're just like, no way are interest rates on homes going to go down, because all the notes and the interest rates that go into that mortgage-backed security make up the interest rate that the security pays. So, it's just simply supply and demand.
Great. Thank you so much.
Yep.
Good stuff. Well, I think we're about good for today. What do you guys think?
Hey, hockey fans.
When's the next game, though? When's that, tonight?
I think the women play huge game against Canada today at, I think, 1 or 1:30.
And this is for the gold?
Yep.
For the gold.
Wow.
Yeah.
So U.S. and Canadian women's are playing tonight.
And that is some high quality hockey. I don't watch.
I didn't even know that they did that.
I've been watching it the last 10 days. It's exciting.
Do they get in fist fights like the guys?
Shoving, but not fist fights.
Not really.
Do they? I know in pro I don't know if encourage the fights, but they certainly allow it. Is that the same in the Olympics? Do they let them kind of duke it out?
You don't see a lot of fights in the Olympics because
the statements.
Fights send a message, and
and you wouldn't want that.
They can be good, but they also disadvantage your team. It's like watching the Stanley Cup Finals. When the stakes are that high, it's not worth disadvantaging your team. So you don't see a ton of fights in Olympic hockey, but the quality of the hockey that I watched yesterday, if you're a hockey fan, I mean, it's as good as it gets. These guys,
I'm not being funny. Where's the Olympics at this year? Where are they at?
Italy.
Italy. Okay.
Yeah, northern Italy in the mountains.
Okay. So the games are likely played more in the afternoonish because of the 6-hour time difference.
Yeah, I think they play them as late at night as they can, so that the Canadians and the Americans can watch them on TV in the late afternoon. Yeah. I mean, if you get a 3:00 game, they're starting that game at 9:00 in Italy. So that's about as good as you're going to get, so to speak.
Yeah. And that would be the reason I don't play hockey. Yeah.
That's it. That's why.
Starts too late. Otherwise,
women's gold medal game today, men's semifinal tomorrow, and then men's gold medal game on Sunday. It's going to the next 4 days. It's if you like the sport, it's as good as it's going to get.
That'll be exciting. Yeah. That'll be exciting.
And is it all the pro players playing these days, like in basketball? So it's not.
Oh, it is.
Yeah, they shut down the NHL season for 3.5 weeks, so
it's the big boys and the big girls
play. It's literally the best players in the world on the ice.
Mm-hmm.
Wow.
Interesting.
So
interesting feeling.
We'll have to watch it, Frank. We'll have to watch it, man.
Maybe.
Yeah.
Maybe.
Yeah.
All right. Well, let's get out of here. Once again, Owen Lee, appreciate you, brother. Always a pleasure, man. Thank you so much. For the rest of us, let's get after it. Pre-approved and looking day today. Call your pals, man. Ask for the referral. You guys have a great day. We'll see you here tomorrow. Chris Johnstone.
Take care.
Let's get that refi calculator going. Yeah, let's see what's going on in AI. Big news, man. You guys have a great one. We'll see you here tomorrow. Adios.
Hi, everybody. Have a good day.
Have a good day. See you later, Carl.